Welcome back, all. Now we come to our third topic in our chapter 3, that is loan repayment and other levies. In this topic, we will talk about the how loan repayment is done. So, repayment is referred to the act of paying back the money which was previously borrowed from the lender. So repayment can be well explained with these 4 points that are: repayment is the act of paying back the money, and repayment terms on a loan are mentioned in detail in loan agreement. That also includes contract rate of interest, the loan repayment interest. Then generally people end up repayment of a mortgage loan. Then all the type of distressed borrowers might have various options in case they are not unable to make payments regularly. Like few people who sometimes the borrowers are unable to pay the loan, so they turn towards the bankruptcy, and in this case they need a bankruptcy protection. So the alternatives for bankruptcy can be like earning additional income, then refinancing. uh, First alternative can be earning additional income, then refinancing, obtaining support through assistance programs, then negotiating with creditors. Then next we'll see that credit monitoring. What is credit monitoring? Like credit monitoring in bank is ensuring that the funds being utilized for sanctioned purpose, and even the terms and other conditions are to be complied. So under the credit monitoring arrangement, bank should ensure the following: so reasonable estimates of current asset, current liabilities, and working capital should be maintained by the borrower. Classification of current asset, current liability should be maintained as per the guidelines of the bank. Then minimum current ratio of 1.33 should be maintained except for the export industry and other new units. Also, annual review by the bank's annual audited account should be submitted. Uh, annual uh, audited accounts and annual review by the banks. Then ad hoc limit of sanction of the period not exceeding 3 months. Then post sale limit is sanctioned in the form of bill finance as far as possible. Next, we will talk about the prudential norms applicable to restructuring. So, restructuring is an act through which the lender, for legal or economic reasons relating to borrowers, financial difficulties, and grant concession. Like when sometimes when the people who are not able to repayment, or they face some difficulty, so they seek for restructuring. Like restructuring means the norms, like whatever the contracts have been made, the agreements have been made, restructuring them. So this might involve the modification in terms of advances or securities. That could include, generally among the others, alteration of payment period. Like if it's 12 months now, it can be extended to another 12 months. Then payable amount or installment amount, interest rate, anything can be restructured according to the legalities, following the legalities details. So nextly, we'll talk about the NPA. When the asset becomes non-performing, it doesn't pay back the loan. That asset becomes non-performing. So an asset which includes leased asset becoming NPA, which is cease generating income from bank. So the NPA is loan or advance where the interest or principal installment remains overdue for 90 days or more. That becomes a NPA. that account becomes an NPA. An account remain out of order in case of overdraft or cash credit, then also it's NPA. Bill remained overdue for 90 more days in case of bill purchased and discounted. Then an installment or interest remains overdue for a period of 2 crop seasons, then of short duration, then also it comes to the non-performing assets category. Then installment of principal or interest remains overdue for a period of 1 crop season for longer duration crops. Then also this comes under NPA and non-performing assets. Next, we'll talk about overdue. In overdue is a case in where the amount has not been paid on the due date. Then, which is fixed by the bank, the amount which becomes due under credit facility is overdue. Basically, when a person is not able to pay money on the interest on the prescribed date, then beyond that date, that interest amount becomes overdue. So in the income recognition in under overdue is the income recognition policy. The objective has to be that, and based on the objective of this is that it has to be based on the record of the recovery. Then reversal of income. In case of advance, which includes bill purchased and discounted, becomes NPA. At close of any year, interest occurred and also credited to credit account is in corresponding previous year should be reversed or provided if it is not realized. Then appropriation of recovery of NPAs. The interest which is realized on NPA is taken into account, which provides credit in account towards interest are not a part of fresh or additional credit facilities, which is sanctioned to concerned borrowers. In interest application, we'll see that one account of turning NPA, bank should reverse interest which is already charged and also not collected by debited profit loss account, and also stop further interest applications. Then reporting of NPAs. All the reporting needs to be done. There is a requirement of banks to furnish report related to NPAs on every 31st March of every year after completing audit. So in asset classification, while non-performing assets, the assets are classified into 3 different segments. Substandard assets. So asset classification is required for the banks to classify NPAs of 3 categories based on the period during which asset has remained non-performing and realizable of dues. So substandard assets, we can tell about this is that while with effective from 31st March 2005, substandard asset would be such asset which has remained NPA for period of lesser than or equal to 12 months. 12 months. Lesser than or equal to. Then doubtful assets. Doubtful asset is required for doubtful asset if it is remained in a substandard category for a period of 12 months. That becomes doubtful assets. Then in loss asset, asset is one of the which bank or internal or external auditor identifies loss, but amount has not been written off wholly, then such asset will be considered uncollectibly, and such value then continues as bankable asset, which is not wanted, though there might be some recovery or salvage value. So next we'll talk about cost or levy associated with agriculture finance. In this, agriculture loans are of two types: direct and indirect. So in direct agriculture loans, these loans include the loans given to individual farmers, or and also include SCGs and JLGs. That is a group of individual farmers, provided that bank maintain a disaggregated data on these loans, which are directly engaged in the agriculture and allied activities like fishery, dairy, poultry, animal husbandry, and etc. And in indirect agriculture loans, these loans include loans to the corporate, which includes farmers, producers, companies of the individual farmers, partnership firms, and the cooperative of banks that are directly engaged in the agriculture and other aligned activities. So here we come to the end of the topic. Now that's there is activity time at each and every topic end. So in this topic end, you have to form a group of 5 to 6 students and prepare a presentation and on any of the following topics, and also give some examples regarding it, like for loan repayment. Then in loan repayment, you can give a example about how, a person, how he gives a loan. You can talk to someone and know about their loan repayment experience. Then bankruptcy, credit monitoring, NPAs, restructuring, income recognition, then cost associated with finance and loans. So here we come to the end of the topic 3. I hope you learned it nicely, and please do the activity for further understand. Thank you.